Thanks for joining us today for the earnings call. From the management side, we are represented by Mr. Ander Aranaza Alvarez, the CEO, Mr. K. Jayaprakash, the CFO, Mr. Vikas Sinha, Senior Vice President Strategy, and Mr. Oroiz Lafonte, Global Business Controller. Now I would like to hand over the call to the management for their initial remarks. Over to you, sir. Thank you.
Thanks, Nishant. Good afternoon, everyone. On behalf of the MCIE management, I welcome all of you and wish you on the auspicious occasion of Durga Puja and Navratri. So at the outset, I would like to point out that the MCIE board in its meeting yesterday approved a proposal to close the Stokes operation in UK. The closure is proposed to be done within the next 2 years. As part of this exercise, we are in discussion with our customers to shift most of the existing business to India. A few words on the performance of Q3 C18, which is outlined in the investor presentation, which has been put up. On page 4 of the investor presentation, we have the Q3 C18 results for the India operations. Our sales increased by 20% when compared with the same period last year. This is higher than the growth of our customers in this quarter because of new orders. Similarly, compared to Q3 C17, EBITDA grew by 26%, EBIT by 37%, and EBT by 49%. The EBT numbers for the quarter were bolstered by the forex gain of roughly rupees 90 million on account of forex gains in Mexico. EBITDA margins for the quarter in the India operations was 15.2%. Thus, we can see the positive trend in growth and profitability has been maintained in this quarter. The 9 months YTD C18 results for MCIE India are shown on page 5, and they account a similar story of growth and improvement in profitability. In this period, MCIE India has grown by 23% compared to the same period previous year, and this is higher than both the market growth and growth at our key customers. Similarly, EBITDA has grown by 39%, EBIT by 57%, and EBT by 60%. EBITDA margins are at 15.3%, an improvement of 1.7% over the same period last year. Our European results are shown on pages 6 and 7. On a quarterly basis, MCIE Europe has grown by about 26%, but that includes a positive effect of 10% on account of currency translation. Compared to Q3 C17, EBITDA grew by 22%, EBIT by 28%, and EBT by 29%. EBITDA margins are at 12.2% compared to 12.5% in Q3 C17. This small decrease is mostly on account of stock reduction necessitated by the August holidays. In the first 9 months of C18, MCIE Europe grew by 15% after adjusting for currency translation, which is much higher than the market growth. These growth figures have been achieved on account of the new orders in Gears Italy and Forgings Lithuania and the market growth in trucks. Similarly, for the period 9 months C18, the first 9 months of C18, EBITDA grew by 29%. EBIT by 37% and EBT by 41%. EBITDA margins are maintained at 13.1%, similar to last year. And now if we go to slide 8, we will see the consolidated results for Q3 C18. Sales grew by 23%, EBITDA 25%, EBIT 33%, EBT 39%. Consolidated EBITDA margin for Q3 C18 is 13.5% compared to 13.3% for the same period last year. Slide 9 shows the consolidated results for the first 9 months of 2018. Again, sales grew by 26%, EBITDA by 34%, EBIT by 47%, and EBT by 52%. Consolidated EBITDA margin for 9 months C18 is 14.1% compared to 13.3% for the same period last year. Consolidated EBIT margin has crossed 10% and is at 10.4% compared to 8.9% for a similar period last year. Last thing that I would like to mention is that on page 9, we have mentioned a capex of rupees 4,215 million for the first 9 months of 2018, and this has been necessitated by the growth that we are experiencing. So this is all that I had to say, and we will quickly now go to the Q&A. So here you go.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Ronak Sarda from Systematics. Please go ahead.
Hi, sir. Thanks for the opportunity. A couple of questions. So now, if you look at CY19, how do you see growth planning in Europe? If you can just give some, a business-wise update for CY19 for Austral MFE, the CIE forging business, and Metal Castello.
Okay, let's say that we cannot disclose, our figures for next year because they are not yet approved by the board. And but we are preparing our budget for 2019. Okay, right now we will approve those figures in our board in December. But just to give you my view, my feeling about what will be our trend, I think we will continue our current trend of growth, especially in India, where we are winning new businesses and we are investing in capacity, as Vikas explained. And regarding European market, is also growing, but of course, with the growth is smaller than in India. We are talking about 1-2% of the market growth for the next year, but we still think that we have room to grow. You know that in our Metal Castello plant we have this new program that we got from the customer. We are in a ramp-up process, and we will continue growing in Italy. We will continue growing also in our Lithuanian plant, where we installed a new crankshaft forging line, and we are also ramping up this capacity, so we expect some growth there. And in MFE, let's say that we are now in the top of our capacity because we are fully loaded, and this is the real situation of our German factories. We are at 100% of our capacity, so we expect to be there or a little bit less. Okay, that would be the situation. What I can disclose is that our order books for the next 6 months are at the same level that now. Okay, so we expect that the next year will be a positive year for us also.
Thanks.
So, Ronak, just to clarify, the order book is looking good for us so far, but as you rightly pointed out, the markets are quite choppy both in India and Europe. So, we'll have to look at that, but the order book looks good for us.
That's fair.
Yes, in fact, September was a really strange month due to several changes in the automotive market in Europe, especially due to the change of the emission testing procedure, that the WLTP. This is the new method that was implemented from 1st of September, and that created some problems to some of the car makers because they had no time to validate or to homologate all their engines in the new procedure. This is being solved, and according to their order book, they will recuperate in the next month. So let's say that even though we see some non-clear market situation, the order book is firm. I can confirm you that we will have strong sales in October. That is much higher than September. So this is something that we will see. I mean, we'll see how the market will change with these regulation changes.
Sure. Thank you. Just to follow up on MFE then, you indicated that we are operating at almost 100% utilization. But if we look at the EBITDA margin performance, it has come off sequentially. I understand the August month impact would be there. But despite, do you think we have reached the potential margin profile in MFE, or there is some more room left if, let's say, the new orders are much more profitable than the older ones?
Okay, you know that this MFE business was one of our worst divisions in terms of profitability. Okay, we had very big problems 2015 and beginning first half of 2016, where we had let's say some internal management problems, and that create some issues with deliveries with the customers, and we suffered a lot. But after that, we started the consolidation process. We changed the management, and the company started to work properly. Okay, I would say that now the company is consolidated, even though the margins are lower than our standards. We have a very strong action plan to slightly increase these margins that right now are not the margins that we would like to have. Okay, so we see room for improvement, and we are working for that improvement. Rather than growing the business in terms of turnover, we want to grow the business in the margins. Okay, that's our main task now, because the capacity is fully loaded. That's our task now.
Sure, thank you. And second question is for Vikas and JP. If you can just explain the corporate structuring which you guys announced last month, where the subsidiary has now moved from MFE from Mahindra CIE level to CIE forging level. How does that change? Is there a change of cash, and how does that change the standalone cash position?
Okay. So nothing changes in the console P&L or debt position, Ronak, because it's within the group. All that happens is from Europe, cash moves to India. Okay. So that's what we are trying to do. And it is not completed yet. It will happen. We have some RBI clearances we are awaiting. And it will happen probably in the next 2-3 weeks, hopefully, if the RBI approval comes through.
Okay. What's the quantum, and have we transferred the entire cash from CIE units, or there's still some intercompany deposits at CIE level, CIE Lithuania and so on?
What is the question?
No, Ronak, would you clarify when you say have you transferred all the cash?
Sorry, what I meant was there was some cash balance at CIE level, which was deployed in terms of, they were given to other CIE units as an ICD.
I would think the whole thing would come here. Nothing would remain there.
Nothing would remain there. Perfect. That's really helpful. Thank you.
Thank you.
Sure.
The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Hi sir, good morning. Thanks for the opportunity. Sir, broadly, of the 230 million euro revenue of CIE plants, what would be our exposure to diesel passenger vehicles in Europe? And post the WLTP transition, what is the outlook for the remaining part of this calendar year, and how does that look for the next year? You briefly mentioned the outlook, but if you can throw some color, it will be very helpful, sir.
Okay. What proportion is diesel?
Yeah, the diesel proportion, I cannot give you the exact detail now. It can be something like 20%. That would be the rough figure. Okay, we will check and we will come back to you with the exact figure. But in what is going on in Europe with the diesel is that the percentage of the diesel is going down and the percentage of the gasoline engines are going up. Okay, so the key point here is to have this balanced portfolio with diesel and gasoline, so you can get you will have the loss of the diesel parts, but you will win the growth of the gasoline ones. And I will give you one example that you will understand perfectly. We are supplying K9K diesel engines for Renault in Galfor, in our forging plant in Galicia, in Spain. But at the same time, we are producing the H5 crankshaft for gasoline for Renault also. So K9 is going down, H5 is going up. So in fact, the total revenues that we are having now in Galfor are at the same level or above than we had previously. Okay, so we are not at all concerned with this diesel change, at least in our Mahindra CIE business. Okay, this is not impacting us negatively.
Okay. Sir, in the last call, you had mentioned that Renault could see some impact. We could lose 1 or 2 weeks of production impact. That, along with this holidays, how does it all tie up? How did it all tie up during the quarter?
Yes, you can see that you look at the European figures in this quarter. You saw some slight, let's say, reduction of the sales and of the EBITDA due to this effect. Okay, mainly because we have those this holiday period where we stop our facilities during 2-3 weeks. This is a standard in Europe, and at the same time, our customers, they took this time to change their product portfolio. Okay, due to this regulation changing from the old exhaust measuring system to the new measuring system, they had to adapt deadlines. So they took, and for example, Renault took 1 week more of vacation in September to prepare the lines for the new procedures, new test norms. Okay, so that's what happened, and that's why the revenues went down. We are selling also to some German car makers like Volkswagen or Daimler or BMW, and the drop for BMW Group, Audi has been the biggest one. Okay, but at the same time, as they knew that in September they were not able to sell cars, they sold much more in July and August. Okay, because they advanced and they sold all the stock the previous day. So the real impact in this quarter has not been huge. And what they are saying us in this moment is that they will recuperate, and the order book for the next month is quite strong. So let's see. I mean, there are changes in the market, and we are looking at them carefully, and we are prepared to immediately react to these changes. And that's where we are now. But overall, I think that we are managing that perfectly, and the impact, as we are really well diversified, the impact is not relevant.
Okay, sir. Sir, if this is a standard shutdown, in last year, same quarter also, we would have had this kind of a maintenance shutdown, or I mean a holiday shutdown, but we did not really see any, even in euro revenues, we did not see any impact last year. So this, the impact that we saw this quarter was largely because of slowness in the end customers. Is that a right way to look at it?
Okay, if you look at the 2016 figures and you go back to the 2016 third quarter, you will see that we had this drop. Okay, in 2017, you are right, we did not have the drop, but it was mainly because our MFE, our German forgings, were running at the full rate. Okay, and that was because mainly we were recuperating from the backlogs from the previous months after we solved our internal problems. So in 2017, the sales in the third quarter were very, very high, or higher than usual, mainly because German forgings were running at full rate. This year, even though German forgings were also running properly and well, let's say the average was a little bit less than 1 year before. But this reduction in revenues in the Q3 in Europe is standard. So we will see that, let's say, every year, because the standard, even the car makers, Renault, Nissan, Daimler, BMW, they stop at least 2 weeks in August time.
Okay. So the quarterly run rate should normalize from the next quarter onwards, or I mean from this quarter, October, November, December quarter onwards. Is that a fair assumption?
I think so.
Okay. Sir, and Europe margin has come off sequentially. You had mentioned something related to the stock down. If you can please explain that part.
Yes. In fact, what we had due to this, let's say, shutdown period in August, we reduced our production. So our revenues, our internal revenues were lower than the sales. Okay, so we produce less. So we consume our internal stock during this period. That was the main reason of losing some margins. So if we take the percentage of EBITDA against the revenues, we would be at 12.5, 12.6%. So the drop of almost half point is due to this effect of producing less than the sale. I don't know if you catch me. You understood because understood, sir. Yeah.
So the margin should normalize again going forward.
Yes, that's what we expect. I mean, once we recuperate the production in a normality without a shutdown period, we should recuperate the margins. Yes, that is what we expect. Yeah.
The only thing you have to remember that we have December in this quarter again. So these seasonal variations will be there. So you have August in Q3, you have December in Q4. So these kind of variations you have to keep in mind from quarter to quarter.
Yes, but it's true. But in December we stop. We let's say have 1 week holiday instead of 2, 3 in August. So the impact is much less, and that's the situation. So we expect to recuperate, and our feeling and our view of the business is that we are running in the same way that we were doing till now, and we will keep in this pace.
Okay. Sir, in terms of our top 3 customers in the passenger vehicle business, Renault, VW, and Fiat, what would be the contribution to the PV business, sir? If you can help us understand that.
No, you are asking, how much do the top 3 customers for our car forgings business account for? Only for the car forging?
Yes, sir.
Out of that 230 million euros, how much is accounted for by the top 3?
Yes, sir.
We'll have to get back on that.
Okay, no worries. I'll take it offline from you, sir. Just one last question, sir. In India business, RM cost as a percentage of sales has been increasing over the last 3 quarters. Is it because we are not getting price hikes on time, or is there a situation wherein because of competitive intensity we are not able to take price hikes? What is the situation there, sir?
So RM by sales percentage going, and this you are looking at it, the standalone number.
Yes, sir.
So it's simple. We get compensated. There is no place where we don't get compensation for this. But it is pure mathematics. As you keep climbing, the percentage will go up,
Okay. So per se there is no major issue.
Anything. There is no slippage there.
Okay, sir. That's it. Thank you.
We are able to improve our bottom line. No, it's not.
Yeah. Sure. Thank you, sir.
Thank you. The next question is from the line of Priya Ranjan from Antique Stock Broking. Please go ahead.
Yeah, thanks for taking my question. First question on to JP. What was the net debt number for quarter?
About 7.5 billion rupees.
10.75 billion. Okay. And why, this is going up because of the restatement of the European debt in Indian rupees?
It's come down vis-a-vis the opening number, no?
Net debt, I'm saying, after reducing the cash investment.
7.5, yeah. So it's come down vis-a-vis the beginning of the year.
So it's 7.5?
Yeah.
Okay. I thought it's 10.5. Okay. And the second question is on the growth outlook across the market. I mean, the new customer which we are talking about in the metal Castello and domestic business and even in Mexico, what timeline we see that all this ramp up will be at their peak level of utilization? And maybe 1 year down the line, 2 years down the line, kind of timeline. And second part is on the Billforge expansion which we have done last year. So where are we in terms of the utilization of that, like cold forging, etc., where we have expanded? So what kind of utilization we are generating there? Thank you.
Okay, regarding Mexico, we are getting new businesses also right now with additional customers, and we are adding some more machinery to, let's say, to fulfill the demand during the next year. So the SOP will be mid-2019 of these new programs, and we expect to be, by the end of next year, we will be at the peak, okay? The current customer is also ramping up, and we expect also to be mid of next year in the peak of the volume. So what we expect is that we will have, during 2019, we will have an important growth in our Mexican plant. And in fact, we are today a little bit below our budget, and because there is a delay from the customer. Okay, that is the situation. And regarding the Billforge in India, you saw that we have a huge growth, organic growth this year also, let's say about 25% organic growth. That means that all our capacities are full, and we are adding some new capex in Billforge in India in order to continue growing. And we have a huge demand. This year we added, till now we have added 282 million rupees in investments for cold and warm forgings. So let's say that the company continue growing. So the development of the company will continue giving, let's say, the opportunity to grow, because we are doing what all the Billforge team is doing fantastically with a nice margin, and with a very, very huge success in the commercial side. So we will continue taking this opportunity to grow our business for the future.
And similarly for Gears Italy, same situation. I think by the end of next year, the ramp up will be fully achieved. So we are actually investing even at Italy.
And on the domestic front, in terms of the new order wins, etc., which we have talked in the past, like Ashok Leyland, etc. So have we started supplying, or we are yet to start supplying on this?
So in India, we have started to supply. If you look at our 9-month results, as we talked about, refer page 5, our growth is roughly 23%. And if you look at our key customers and do a weighted average, our growth is higher than that. Our key customer growth rate is 15%. And, we have grown by 23%. So the new customers that we have talked about, they have started hitting our P&L, and they have started affecting our P&L, and they are providing us with a little bit of extra growth that you're seeing.
And in terms of the growth, when we talk about 23, so how much is the pricing? Because commodity has also moved up. So what is the volume and the pricing mix? This is a very rough thing that we could talk about. RM would account for roughly maybe 3-4% of them. Okay. Got it. Thanks. All the best.
Thank you. The next question is from the line of Ujjwal Shah from Quest Investment Advisors. Please go ahead.
Yes, sir. Thank you for taking the question and congrats on what set of numbers.
Excuse me, this is the operator. I'm sorry to interrupt. Mr. Shah, may we request you to speak a little louder, please?
Yeah, thank you for this opportunity and congrats on good set of numbers. Of late, we have been hearing a lot about global OEMs lowering their growth targets. Even China is seeing some kind of a slowdown. We have seen a very good auto growth across the globe for quite some time. Anything that you are hearing from your set of customers on growth numbers for CY19? Are there any concerns that they are looking at?
So as Ander pointed out, of course, there has been a lot of, changes that have happened in September. So there has been, as I said, the growth or the market has been quite choppy as far as, definitely Europe is concerned. But we do expect a lot of that growth to recuperate in the next few months. So to that extent, right now, our order book looks, absolutely, okay. So there is no problem. Of course, the growth rate as far as the passenger car market is concerned has dropped down compared to previous years. I think the growth this year is for 9 months. So the PV market in Europe has grown anywhere between 0 to 0.5% for the first 9 months. But as we have pointed out, our growth in this market is because of the new order and not because of this market growth. So the market for cars in Europe has, you are right, has slowed down. So it is between 0 to 0.5%. If you take EU, the 27 countries that form the EU, it is roughly 0.3%. If you take including Eastern Europe, then it is only about 0%. There's hardly any growth there. So that is there. But as we told you, our growth will be because of this new order. As far as the truck market is concerned, I think the commercial vehicle market has been doing better than the car market. And that's why we have seen, Ander talked about growth in MFE, the German plants. I think the commercial vehicle market, we don't have production numbers, but the registration numbers for the first half of this year, it has grown by roughly about 4%. So there is growth in the truck market so far.
Right.
But yes, as we pointed out, we are keeping an eye on the market. The markets, it is very difficult to predict, frankly.
Yes, this is Ander. Our commercial team is checking and asking our customers continuously to see if there is any movement in the demand or any reduction or a slowdown in their expectations. And 100% of them, they confirmed us that they will recuperate, and they confirm us the orders and the volumes. So, yes, we are vigilant. I mean, we are really tense on that because we see that something is moving in the market, but all the feedback, and I will say you that 100% of the feedback we receive from our customers is that they will keep their figures. So let's see. I mean, we are waiting and we are prepared to react if something is moving.
Sure, sir. Thanks.
We share your concern about the market, really.
Sure. On Stokes transfer, sir, that you said the business might come to India. So any margin impact that we might see positively for the Indian business, and any one-time cost for this closure of Stokes that we need to look at?
JP will take that question.
In terms of cost, one-time cost, we are talking about 4 to 5 million euros. Yes, that will come in. And we would think over the next 6 to 7 months.
Okay.
The yes. And to respond to your question, whether there will be any margin improvement, I think we are still in talks with the customers. We've really figured out how much will get transferred and what pricing. So I don't think we can really comment on it at this point of time. No, whatever. Let's have the customers tie up first.
Okay. Okay. And lastly, on Billforge Mexico, last time Ander did mention that company is doing a lot in terms of improving efficiency over there to match standards of CIE. So where are we positioned as on date in improvement of efficiencies in Mexico, and what could be the peak revenue and margin potential from the Mexico plant?
Okay, in Mexico right now we have let's say one expert, 14 expert team there. They are working inside let's say in Mexico since the last months, and they will continue there another 6 months minimum. And they are implementing the different technologies and improvement system to get more efficiency and less downtimes in our production. Okay, we are improving a lot in this moment, and the trend is positive. You know that we have one transfer press already running, and second vertical press that is going to start the production beginning January, and a new press that is already arriving now, and we will set up this and start production also beginning next year. Okay, so the company continues growing. We have the new programs from additional customers that we will start during 2019. So let's say that the evolution is positive. We are still below our standards. We are not reaching yet our, let's say, technical standards, but the improvement is there, and my expectations, let's say, I am quite optimistic with the evolution of this company in the next months. Okay, so that's the situation, and yes, it is let's say important company for us to improve, because we expect to grow and to have an important margin from Mexico in the next years.
Right, sir. And by 2020, what could be the peak revenue that this Mexico unit can reach, sir?
Okay. Yeah, well, let's say depending on with the new programs that we are receiving, that we could be at $30 million more or less. That would be the target that we have right now. Okay, and if we succeed with additional businesses that we are now quoting, probably more.
So this is annual.
Annual, yes.
Sure. Thank you so much. That's all from my side.
Thank you. The next question is from the line of Nikhil Vaishnav from VD Investments. Please go ahead.
Thanks for the opportunity. I would like to know, in this quarter we have seen some decrease in promoter stake from 69.83% to 67.76%. So can you give some clarity on this, why it has decreased?
No, promoter stake, basically we have both CIE and M&M are designated as promoters. So CIE stake remains at 56, roughly around 56, a little bit more than 56%. I think the M&M stake came down. They are now at 11.5%. So what you are talking about is a decrease in M&M stake.
Yes, so why it has decreased? Like, why they have decreased their stake?
No, so this MCIE is a CIE company, so it is run completely by CIE. M&M is a very valued partner, but they provide us guidance, but the day-to-day management and the strategy of the company is in the hands of CIE. So what M&M is doing is best asked from M&M, and we will not be in a position to comment on that. But as far as CIE is concerned, it is absolutely committed to MCIE. As in fact, CIE has increased its stake from roughly about 51% to 56% in this calendar year.
Okay. And next, I would like to know on consolidated basis, quarter on quarter, I'm talking about quarter on quarter, the sales has decreased. So what is the reason? It is due to like European unit which has shut down in this quarter is?
Yes, that's right. It's the 2 to 3 week shutdown that Andrew talked about. That is why the difference between Q2 C18 and Q3 C18 in consolidated numbers, you will see.
So can you help me out with how much it has impacted, like shutdown we have seen, so how much it has impacted?
No, that will be hard to quantify. It is almost half a month of sales. You can talk, if you want to talk in very rough terms, it is half a month of sales we are talking about here.
And also in coming quarter, in December, we will see same situation. It will be shut down for 2 weeks. So do you see how?
It won't be shut down for 2 weeks. It will be shut down for a week. So as I said, that's a normal pattern of business.
Okay. And next question, ramp up of Lithuania, Metal Castillo, and Mexico. So can you tell some currently what is the status of this? So how much ramp up we have done till now?
So, Ander explained that, just to a previous questioner. So, I will, I'm trying to summarize what he said. He will add if there is anything more to be said. So, as far as Italy is concerned, so by 2020, we should be in a ramped up situation. We should be fully ramped up. We are still investing in Italy. Billforge, India also, we have been investing, as he pointed out. And again, next year we will see growth there. Billforge, Mexico, he already pointed out that by 2020, we'll be reaching a figure of $30 million on an annualized basis, and it could be more if some more programs fructify. The other area where we are ramping up is in Lithuania, which is our crankshaft business order. Again, by 2019, we should be in a fully ramped up situation. So this is in summary of what the 4 main areas of growth. Other than that, the India business, other than Billforge, is also showing good growth, as you are seeing. And so this is in summary what is happening on the growth front.
You said in Italy we are investing some for ramp up. So can you guide me with amount, like how much we are investing in that?
So again, that was roughly 282 million for the first 9 months of this year.
And how much we are investing, like how much we will be doing the whole year?
No, just hold on. That was not right. That was for Billforge India that we have invested 282 million. Gears Italy would also be roughly in the same range, roughly about 300 million rupees.
And for full year, how much we will be investing?
Take the same run rate, please.
Okay, same run rate. And I would like to know any new order win or new customer added in this quarter, like any new order?
No, as I said, we have pointed out our new orders have been ramping up. So these capacity expenditures are for the orders that are already with us. And so these capacity, capex that we have done is for orders that we already have. So it is not for any new order. We keep continually work for getting newer orders. We have talked about in the past that, we are talking with Hyundai and Kia in India, ZF in India. So, we are talking with some of them, and we expect orders to fructify from them.
Okay. So, okay, that's it from my end. Thank you.
Thank you.
Thank you. The next question is from the line of Bharat from Quest Investments. Please go ahead.
Hi, good afternoon and congratulations, Ender and the whole team on a good set of numbers. Hello.
Thank you. Go ahead.
This question is mainly for Ender. See, what is the impact? Have we seen any impact of this renegotiated trade which has been finalized with Mexico and US on our Mexico unit?
Okay. Yes. I have been, let's say, repeating this message in my previous calls and my meetings with in the board here in Mahindra CIE and with other different investors. Okay, what we saw from the beginning is that the Mexican activity wouldn't be affected by these renegotiations of the NAFTA agreement. In fact, what we see is that the new NAFTA agreement is really positive for the Mexican part manufacturers. Okay, you know that the previous NAFTA agreement required a local content of the products of 62.5%. Okay, and now this local content has gone up to 75%, and that means that more local content is required from now on. This is one important point, and that would be really positive for us, let's say for the manufacturers located in Mexico. Additionally, there is another requirement that can be it's a little bit tricky. They require that the 40% of the car need to be produced with salaries above $16 per hour. Okay, that is, of course, that means that that 40% of the cars should be produced in the States, because the Mexican salaries are much lower than that. Okay, so what this rule is looking for is to maintain the assembly of the cars and the assembly of the engines in the States rather than in Mexico. But the part manufacturer, that as we are a part manufacturer, are not affected at all by that limitation. Okay, so overall, our view is that more parts will be produced in NAFTA, more parts will be produced in Mexico, so we will have higher opportunities to continue growing the business. And in fact, what we see right now is that, as you saw that we are investing in Billfords in Mexico, is that we expect to continue developing the business there. So let's say that we are happy now with the new agreement.
Okay, great. And second, now with the change in European market, I mean, passenger vehicle moving from diesel to gasoline, so will it have any impact in the content per the vehicle from our side? See, if we were supplying, say, forging worth of, say, €1 in 100 euro car, will it change us any significantly if it is moving from diesel to gasoline?
Excuse me, this is the operator here. The line for the management has dropped. Please stay connected while we reconnect the management. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. So you may go ahead. Mr. Bharat, may we request you to repeat your question, please?
Hi, and see, now in Europe, see, diesels are moving out and more of gasolines are happening. So do we see any impact on the content per vehicle changing for whatever we are catering to European gasoline manufacturer car? Hello?
Okay. Yes, I explained this also in a question before. I mean, what we usually have is, let's say, we have a balance of the different products we produce, either for gasoline, either for diesel, okay? And what we see right now, and if as our portfolio is well balanced, what we are perceiving now is that the diesel components are reducing importantly, but the gasoline products, for example, the crankshaft that I explained before, the diesel crankshafts are going down and the gasoline crankshafts are going up. that means that in average we are not feeling any impact. And this mainly, the main reason of not having this impact is because we are in looser engines, but also in the winner engines. So we can offset that. So in terms of our Mahindra CIE business, we don't see any negative impact on that. Okay?
Okay. And on India side business, we are seeing some slowdown in from September. So do we expect that India business may see some softer trend, going ahead?
Bharatji, if the market comes down, obviously we'll have an impact, and you are right. We are seeing some impact in the four-wheeler segment for sure, but the two-wheeler segment remains robust. So does the tractor segment and the LCV segment. So, we are hoping that all in all, it will work out for us. But you are right. There are signs that the four-wheeler market is softening a little bit.
Okay. And recently we read that Maruti is working on consolidating their vendor. So how do we stand there?
As far as, when we have been working very hard as far as Maruti is concerned, but as we have always talked about in the past, they have got a very good supply chain already in place. So we are working very hard with them. Wherever there is an opportunity, we are trying to see if we can work that opportunity out for them. So yes, we are speaking with them.
Okay. So could it be a positive or negative? When we will understand?
If it is positive, then we'll proudly talk about it. You can rest assured of that.
And what is the CapEx guidance for next year?
JP?
We can go with the 5% that we've been always talking about.
So 5 to 6% of sales.
Okay.
So roughly, that would translate to about rupees 4 billion, I would think. 4.5 billion. I think 8,000.
Okay. And there was once upon a time a plan that to bring all forging under the CIE, Mahindra CIE. So where do we stand, like Brazil, China, and one more we have a plant?
Okay. The project to bring all these forgings to Mahindra CIE is still there. Okay, so we will probably make this step in the next, I would say, in the next quarters, next year. Okay.
Okay, great.
We have three forgings. One is in China that we own. CIE owns 50% of this forging. Then we have the forgings in Mexico, that is Forjas de Celaya, that belongs 100% to CIE, and we have also additional forging plant in Brazil. Okay. That belongs also 100% to CIE. Okay, so the plan to incorporate those forging plants to Mahindra CIE is still there. Okay, so we will accomplish that. We are preparing the budget for next year, and then we will prepare our strategic plan, and we would like to let's say, to show and to present this strategic plan the beginning next year.
Are we online or have we dropped out again?
No. I'm listening.
Okay, great.
Okay, great, and thank you. Wish you all the success. Thank you very much. That's all from me.
Thank you to you. Bye-bye.
Thank you. The next question is from the line of Sriman Tutoria from Unifi Capital. Please go ahead.
Good afternoon, gentlemen, and thanks for the opportunity. While you have shared details on the European passenger car market and how the OEs are now expecting for the better months ahead, especially they expect a better October. For clarification's sake, just wanted to check if Mahindra CIE plans in Europe at similar utilization levels as they were before September? The current utilization levels of the plant.
Yes, we do plan that. As we talked about, we have made investments in Italy, so we do plan same in, we are not, at least we have not seen a softening of our order book, and so we do plan the same levels of utilization.
Okay, great. So secondly, wanted to check, how meaningful is scrap metal usage in the overall raw material mix, both in, say, the India operations as well as the European?
So on scrap, if you look at page number 10 of our investor presentation, which which I have not talked about in my opening remarks, but we give it, which gives you the Q3 CY 2018 number. The other operating revenue line would largely be scrap. Okay.
Yeah, but in the raw material mix, do you use scrap, more of scrap? I was more willing to check.
No. We use only in foundry a little bit, that's all.
Okay, sure. Thank you and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Sunil Kothari from Unique Investment Consultancy. Please go ahead.
Thank you very much, sir, and congratulations for good performance.
Thanks, Sunil.
Yeah, thank you. Sir, my question is to Mr. Ender. Sir, what right things we are doing in European market? The market is growing at, say, 3-4%. Somewhere passenger vehicles is just less than 1%. And we are growing at around 15%. So yes. How sustainable these are and what we are trying to do which can sustain these things, please?
Okay, this is a good question. Okay, it's a good question. In fact, let's say that you know that we have three main businesses in Europe. Okay, and we can divide them. One is off-highway gears production in Metal Castello. Then we have the passenger car forging components, and then industrial vehicle forging components. Okay, that is the German business. I would say that in Metal Castello we got a huge order from our customer Caterpillar, and we are now investing and ramping up this to produce and to let's say to sell this new order. That is one of the reasons for the growth. Okay, and this growth will continue because we are still adding capacity, and we are receiving two new machines by January, and those machines will be ready to produce by April, May to start the production. So this is something that is going on. Okay, so this is a good point to grow, and we will continue growing on that. In our forgings, let's say CIE forging, passenger car forging, what we opened was a new crankshaft production line in Lithuania, and we got new businesses for this plant, and we are doubling the sales on this plant. Okay, that is the growth, the reason of our growth in the passenger cars. The rest of the businesses are growing also, the rest of the plants, but at a normal pace of 5, 6, 8%. But in Lithuania, we are doubling the sales due to this additional line we started last year, and the new orders we got from our customers. And finally, in Germany, we are let's say full rate in this moment, and we don't see a growth expectation in this division. Okay, so Germany will remain as it is, or perhaps we will reduce a little bit, because right now we are working 24/7 days, and that pattern is creating us some production stresses and quality issues and this kind of thing. So we will probably reduce a little bit our exposure to Germany, and we will continue growing in passenger cars and in the gears production.
Great, sir. And so this German operation can achieve double-digit EBITDA, or it is far away?
Which one?
German operation.
No, MFE is not that, let's say it's far away yet to this double-digit EBITDA, but this is our target, yes. This is what we consider double-digit EBITDA, is what we consider a minimum EBITDA to be sustainable, to be able to renew the machinery, to invest, and to be in the market in the long term. So yes, we are looking for that double-digit. We are not yet there yet.
Great. sir, last question is just now, in our previous question, you replied about this merger of other CIE's forging units in this Mahindra CIE. So the timeline you given is next year or next quarter?
China, Brazil, Mexico. Okay. Next year, yes.
Next year.
Thank
you very much and wish you good luck. Thank you.
Chalo. Thank you, Sunny. Thank you.
The next question is from the line of Shyam Sundar Sridham from Sundaram Mutual Fund. Please go ahead.
Hi, sir. Thanks for this opportunity again. So broadly in Europe, in terms of in euro terms, we have done about 10% revenue growth. How does the volume and price mix there? Last quarter we had indicated 1H we had about 1% kind of an RM price hike that we obtained. So how is it now in 3Q?
No, he's saying 10%.
No, we had in euro terms. Is there any impact of price increase in euro? We had some in Q1.
Okay, yes. No, okay, wait, sorry, we didn't understand. Now we understood. Sorry. The point is, in the Q3 there is no any price update. I mean the price update was done in Q2, and so we compensate all the, let's say, the amount lost in the Q1. So from Q3, let's say that there is no additional change, there is no additional moment. I would say that also in the Q4, the raw material will continue flat, and then for the next year, we don't know yet what will happen.
Okay. So of this 10% euro revenue growth, how much would be volume, sir? 9% is volume growth?
No, I think if you look at our 9-month figures for MCI Europe, I think we have grown by 29%, out of which the impact of the exchange rate is about 14%. So the real euro term increase is roughly about 15%. Out of that, some part of it, but roughly 3-4% again, would be impacted by the raw material price increase, and the rest would be volume.
Yes. Yes, okay. I would say that from the growth, 3-4% is coming from the raw material price increase, and the rest, I would say, then 11-12% is volume growth.
Okay, so that's very helpful. And then how does the same thing look for India?
India, and I'm talking again 9 monthly results. So you have 23% growth. So again, if you take out 3-4% of raw material again here, and out of that 20-21% growth, roughly 15% is coming from our key customers, and the rest is coming from other customers, new customers, and smaller customer growths.
Okay, sir. Thank you. That's it from my side.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. The next question is from the line of Priyanka Mehta, an individual investor. Please go ahead.
Good afternoon.
Good afternoon.
I had a question regarding the merger of Billforge and Mahindra CIE. When do we expect the regulatory approvals to get to this?
So you are speaking when the merger will come through?
Right.
See, we would expect it to come in about 6 months' time, but you never know. Nowadays, NCLT is really choked a bit because of all these IBC cases. But I would think 6 to 8 months would be what I would expect.
All right. Okay, and another question was, last call we had discussed that you disclosed the roadmap for 2020.
Yeah, we had said that, we will probably do it by the end of this year, but, we are rethinking and reworking on it, and, we'll perhaps do it sometime next year. Yes, we had promised we'll do it sometime later this year. My apologies for that we are not doing it. We'll do it sometime next year now, but we'll do it.
All right, okay, that's it. Thank you.
Thank you so much, ma'am.
Yes.
Thank you. The next question is from the line of Bharat from Quest Investments. Please go ahead.
And these stocks which we are closing down, so what will be the impact? I mean, is currently making any earning any revenue and or incurring profit or loss? If you can give some color on that.
See, our turnover, if you look at last year, was out of the total turnover, stocks was about 1.5%.
Okay.
And on that, a very insignificant EBITDA and bottom line. So I don't think it's going to be very material.
So are we earning or making a profit, or it's a loss-making unit?
Marginally loss.
It's loss-making, yes. The EBITDA is more or less 0%, and we have more or less 1 million euro total loss on EBT.
And do we have any plan to shift machinery or anything, or will not be?
No, as I talked about, we are talking to customers to shift the business. As far as the machinery is concerned, I think that also we will take a call on, whether we can shift it to other plants.
Okay, thank you very much. Thank you. That's all.
Thank you so much.
The next, yes sir, go ahead please.
Yeah, if we can do it quickly, if we can wrap it up in the next 5 minutes, please.
Sure sir, just one more question to go.
Yeah,
sure. The next question is from the line of Manish Kanakia, an individual investor. Please go ahead.
So I would like to know that the Lithuania plant, when we do the expansion for crankshaft, what kind of revenue do we expect to be generated, additional revenue?
Ander did mention that the Lithuania plant is doubling its revenue from now to 2020. So it would be going from euro 20 million to roughly about euro 40 million.
It will be annual, right?
Annual, yes. We are talking annual here. Sorry, we are talking annual. My mistake. I should have said that.
And what about in Italy, whatever ramp up we are doing that?
So Italy, Italy, if you look at last year, we were roughly about around 50 million euros, and that 50 million euros, you can expect a growth of about 20-25% on that.
And both these growth will be coming in CY20.
Some growth this year, some growth next year. Yes.
So CY19 then.
CY19 you will see growth, and CY20 also you will see growth.
All right. Okay. Thank you so much. That's it.
Yeah. Thank you so much.